Hey traders, Nick Shaheen here, recapping the week ending, what is it today? 12/14. Okay, so the day started great. There was a bounce, stocks went green, and then crapple happened. Fear rose, but really, if there's one note today, is Apple. Down 3%. When maybe 2% at the first. No, it was down 3% when the markets went green. And the markets cannot rally with Apple down 3% because, especially the NASDAQ, that translates to about 0.5% down on the Qs, for example. So, regurgitation of the same meme, iPhone sales, blah, 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 blah. But, nevertheless, can't argue with the price action. It is in value territory, like we've said before. And here's the funny part. They lowered the price target from 290 to, get this, not zero, but 280. So, not sure who's doing the selling on that headline, but that's the only headline. In fact, there was a good headline on Apple, but nobody's paying attention, that they sent a patch to overcome this Qualcomm thing. So they may have changed the software enough to where it complies now with the lawsuit. I'm not sure, but that's what I read. And being technical, that's what it means to me. So if you change the code, therefore that code is not Qualcomm. I don't know what the dispute is all about. I'm speculating. So all that aside, fear on Friday. So obviously Friday is a bad day. We are down 1.5% on the SPYs, up 4% on fear, but still not as high as last time. So if things are so bad, why aren't we setting new highs in fear? We're setting lower highs. So the opportunity is still, the problem is that if fear spikes, it just spikes, and in the short term, it doesn't respect the measured move. Like, for example, I did show that upside white arrow, which would cause big market problems. You know, I made it so big because once it spikes, usually the stock, if it spikes from here, I can tell you exactly how much it's going to go, almost. With fear, it just goes. And if you don't believe me, go to the VIX. A few years ago, it was 90. It's now... We're screaming at 20, 21, 22. It was 90, okay? So fear is high, but it should be higher. And we're still a coin flip. The day is still not done. There's still a possibility that the day could get better than this, and that would be ideal for the bulls. All that aside, the day is still not done, and I do have a few trades I can share, but caution. There are some big moves, the biggest of which is J&J, so make sure to read the write-up and the summaries, and I did a video too, so there are some things to do. But all said and done, I'm still fearful of the SPX, for example. People keep saying, I want to see a retest of the lows of February. What they don't know is that if we get there, it could most likely trigger a fall way below, at least 100 points or more. If, 2440, 2420 is the first eyeball area, and then below that is the low 2300s, if not 2100s. So I'm scaring you because that's a real possibility. We are too close to these necklines. This is a weekly chart of the SPX. We are too close. So this is a measured move that we're in. So if we lose the recent lows, which is 2580, they want to revisit the February lows, which is here. But that triggers something nasty. So be careful. All right. Next week is all about the Fed. Nothing else matters. And what matters is this is the inverted yield curve. The 2s to 10s, they call it. So this is basically you're taking the yield on the 2-year versus the yield on the 10-year. It's still above 1, so it's not inverted yet, meaning short-term rates, the 2-year, is still a little bit lower than the TNX, which represents a 10-year yield. So once it becomes below 1, then the short-term rates are more expensive than the long-term rates. That's an inverted yield curve. Why is that bad? I've covered it before. Banks won't lend. They borrow short-term, they'll lend us long-term. That won't work for them. They won't do it. It's already inverted on the 2 to 5. So the 2-year is already higher than the 5-year. Price action in the market the last 2 days has been crazy. There are some things I don't understand, so I am missing a piece of the puzzle. Therefore, I am humble to say I don't know what's going to happen next week. I have puts below 260 and at 245 as a complete washout rule, and those are protection. I'm not betting for that. In fact, I'm still biased long, but I'm very well protected. I do have a few credit call spreads here and there. I do have a few long bets, but they're longer term. Basically saying this too shall pass. We still have the malaise of China and the fear of the Fed, This coming week, we will eliminate one of those two because they will tell us, yes, they're raising in December, or no, they're not, and what they're going to do going forward. Are they still, they're going to raise in January? I don't know. We shall see. So next week, pivotal. Can't do much until we erase some of these headlines. I'm still hopeful. The valuations still favor us. So here's a level check. IWM. Okay, maybe I'll go to a weekly. That will show it better. Is this a weekly? No, this is a weekly. Okay, so this is the small caps. The good news is that we are, actually I'm going to go this way. The good news is that this was a measured move, that little green one, once we lost this, and we're here. This was here before, and this was a pivot point from before. This is usually support, okay? The bad news, now I told you, we're teetering, right? That's where the teeter comes. This probably, I should have started with this. This scared everybody. So this is the line I'm talking about. I had a lot of caffeine, so if it's squiggly, sorry. Okay, so touching. I can consider this almost a touch. Okay, so this is starting to look like one shoulder, one head. If this touch, if it didn't, then this is a whole head, and then maybe working on the shoulder. Regardless, if we lose this bottom here that we've been bouncing off of, whoop, this comes fast with a stop over here. So 135 doable, 136 quickly, and then in the 20s. What? Yes, that's why I say you don't want to revisit the February lows. By the way, these guys already revisited the February lows. That was the February low. We're here. Now what? Look at this dip. This is a long dip. So the small caps always move faster than the major indices. Down 20% almost. That's, bear is a correction is 10. 20% is bear market. That's how they define it on Wall Street. Don't know who made those rules, but that's when they talk. We're in the bear market. That means we're down 20% or more. All right, so I'm still optimistic. I can lay like very little money on a bet that the day will close much better and that there should be a bounce and that 270 SPY is still doable. I did take long flyers for next week. It is doable, but it's not the forecast. Hunker down. Be ready for either scenarios. Something has got to give right here. Nick signing out.